Welcome to Radical Coding, and in today's video I'm going to be able to help you understand these cardinal terms in accounts. Now, for some of us that are going in an exam this year, or that will be writing the final exam this year, now these terms are very cardinal because they are not just cardinal because you're able to define them. Okay, they are very cardinal because if you understand and be able to differentiate, okay, each of these terms from each other, then it means that whatever kind of a financial statement I'm dealing with, okay, I'll be able to understand which part of the or which side of the account will each of the name or rather the term be assigned or actually go to. So you have to understand that in every aspect when it comes to business, okay, there is always a term that is accustomed to when somebody wants to start a business. And for example, I don't have capital, okay, so we must be able to figure out or understand or be able to define what is capital, okay. And also within the same aspect, okay, when you talk about assets, okay, we have to understand what are assets, okay. What's the difference between a capital and assets? And then so finally, we'll be able to make you understand what is a liability, okay. So these are the most cardinal terms, not just also for those that are in grade 10 up to 12, or even just Form 1, even up to Form 2. But of course, even outside university or college, okay, you happen to go into the the journey of business, you are going to be meeting these things in either maybe from the bank or from the financial perspective. But nevertheless, let us try to understand what each of those terms actually mean. So start by talking about capital. Okay, what is capital? So capital simply means that these are the resources that the owner of the business actually provided. Okay, these are the sources that the owner provided. Okay, or rather, these are the things that can be used or that were used in order to start a business. Okay, so capital simply means the resources, okay, that the owner provided, okay, in starting up a business, or the resources that were used in order to build up a business. So those could actually mean the capital. Sometimes capital do not actually just mean a monetary kind of, okay. It could mean things that are tangible, okay, could mean capital. Okay, so if we're talking about resources that we can have, then that's not to say that just attached to money. Okay. Okay, so the resources that are provided by the owner. But of course, it is not always that the owner is going to provide the resources by entirely himself or herself. But this could mean that he could have borrowed something. Those resources could actually come from somewhere else, okay? And yeah, so it is not just that the owner of that particular business actually these resources provided by himself or herself. So this could come from any source, okay? Now let's talk about the assets, okay? Now, when you talk about an asset, okay, an asset or rather assets, these are the things that are owned, okay, in the business. And normally, when you talk about assets, okay, you're simply talking about something that could be tangible. So, okay, there is no actually difference between capital and assets. Okay, so the capital that the resources that you provided, maybe the owner provided the resources in that business, and those resources actually became the assets. Okay, so what you're saying is that you have to understand: is there a difference between capital and assets? Okay, of course there is a difference, but actually capital and assets are just one and the same thing. Okay, so you have to understand these two things. But because, of course, that is the most basic way of looking at capital versus assets. The capital is you're trying to look for something to put up so that the business can actually start. Okay, and once the business starts, okay, now we can point at those things that are in the business. Okay, or the things that that business owns. Okay. Now, I'm not going to dive into more detail about the specific type of assets, okay, the specific kind of capital that we can find in a company, okay. And then also we have what is called liabilities, okay. Now, what are liabilities? Okay, so the word liabilities means that some of the things that we can point at, okay, or how we acquired maybe the capital, okay, it simply means that we are liable, okay, we are responsible for those things, okay. You might have borrowed money, okay, so the capital is literally not yours, not until you pay off that particular debt that you got from a creditor, could be a financial, financial provider, could be a bank, could be any financial or lending institution, or could be at an individual level. This implies that I'm liable, okay? I'm responsible for that particular liability, okay? So as long as I've not actually paid off that kind of a debt, okay, then I can say that I still don't have the capital that I'm using is not mine. Okay, somebody just gave me the money, but I have to return the money, and I can actually so that I can become self-sustainable. Okay, or self-sustained. So a liability is simply these are resources that do not belong to the business, okay? Or these are resources that were externalized, okay, in order for the business to jumpstart. Okay, so we can simply say that the resources not owned by the business or the owner. So this is the reason why you see that most of the business, or rather the companies in this world, okay, they have been financed through debt. Okay, so you go and borrow money. Maybe you can ask your family members or your friend or anyone else who is actually interested to be part of that particular company or business. Maybe they could become partner, okay, and then they can contribute something, okay. Of course, based on how you agree, okay, and what kind of terms and conditions, you discuss in that particular, agreement. So the liability could be a long-term liability and could be a short-term liability. Sometimes it happens that the bank, the business want to fall off. The company may undergo bankruptcy or insolvency, okay, and unable to operate, okay. So you might go elsewhere, run to the bank, run to an individual, run to your family member, or anyone else that could actually come on board and help you to, sustain the business. So that is a liability, meaning the company is liable to pay that. Okay, it is responsible for that particular source of resources that has been financed outside the business. So thank you so much for watching. Remember to subscribe, support me for more of these videos. So you can go to TikTok and search for Radical Academy. You can also go to Facebook and search for Radical Academy or Mike Wada, and even also on YouTube, search for Radical Academy and be able to find all my videos from science, from business, as well as even other subject or content that you may like, even computer programming. So thank you so much, and I'll see you in the next video. It's bye-bye.